Ford stock is now down around 30% from its all-time high just set 3 weeks ago. The company reported fourth quarter and full year 2021 earnings after market close on Thursday, capping off a terrific year in Ford's core internal combustion engine business, and charting an encouraging path forward with its electric vehicle business. But Ford stock fell nearly 10% on Friday, mainly due to slow growth in Q4. Hi, I'm Kate from the Motley Fool, and I spoke with Daniel Fulber about the 4 things Ford investors should watch this year as the company ramps up EV production and rolls out the highly anticipated F-150 Lightning.
Yeah, so Ford has a very good problem, and that is incredibly high demand, and now it's just a matter of filling orders. So they sold just over 27,000 Mustang Mach-E electric SUVs in 2021, which officially made them the second biggest EV automaker in North America behind Tesla, which is definitely a feather in their cap. And for 2022, they're expecting to produce 100,000 Mustang Mach-E's. The real big ticket item is the F-150 Lightning, which they actually have 200,000 reservations for as of December 2021. In fact, they had to stop reservations just because they didn't want to have customer demand exceed what they could deliver on and keep people waiting. So if you add up all of the pre-orders for the F-150 Lightning, the Mustang Mach-E, and their E-Transit van, it comes out to over 275,000 reservations across that entire suite of EV vehicles. And they expect their EV production capacity in totality across all of their factories to be about 600,000 by next year. So now it's just a matter of producing as many cars as possible in 2022 before they really get a lot of that capacity up. The Ford F-150 Lightning is expected to begin rolling out this spring, so in a few months now. The big thing for Ford is producing the cars, delivering the cars. Again, they do have a much easier path forward in terms of the distribution side because they have this network of dealerships. Not to get into too much detail, but that's a much bigger challenge for these new EV companies like Lucid and Rivian. It was a nightmare for Tesla back in the day because one of the advantages of the direct-to-consumer model is you control more of the flow of the business, and it leads to potentially higher margins, which Tesla is definitely enjoying now. But in those early innings as a new company, you're probably going to be paying a lot more for distribution, for actually delivering the cars than you would hope for. So Ford has a much easier path forward in that regard. But then I think it's not just about delivering the cars and selling the cars. It's also about how do customers respond to this first F-150 Lightning. Because if it's buggy and it's junky and they have to recall a bunch of it and it's just this tough situation, I think that's going to set Ford back in terms of, well, it's the best truck maker right now with ICE vehicles, with internal combustion engine vehicles. But if they're stuttering a little bit on their EV rollout with the truck, maybe they won't be the leader in EV pickup trucks that they hope to be. So I would just caution investors not to just look at their production delivery numbers, but also look at the customer reception of their cars. Ford is projecting for between 10% and 15% of total vehicle production growth in 2022. And North America just continues to be by far their most profitable segment. In fact, they lost money in their other major geographies. Now, they did say that they're improving kind of their manufacturing process and their rollout in those geographies, so they should improve this year. But again, they expect, I think, a 10% margin in North America, which is really impressive. The big thing with Ford is that they are continuing to grow profit and earn a ton of free cash flow while investing in EVs, which is a really, really big theme that I think makes Ford one of the best all-around EV stocks to buy. Because what it essentially is doing, which is something that Disney did with Disney Plus, that Meta Platforms is doing with its metaverse rollout, that oil and gas companies are doing with renewable energy investments, is it's taking this core business and then allocating extra profits to grow this entirely new business. And that's a really big advantage than having to raise more money or go to capital markets for debt, which is very challenging in a time of higher interest rates like we are now. So Ford really doesn't have that problem because it can bankroll its EV business with its ICE business. So that's just something to really keep in mind. Kind of how will its margins eventually take a hit? Probably not in 2022, but maybe in 2023 and 2024, when they bring that EV capacity up to 600,000 vehicles per year. I would just be curious to see how that impacts their profitability. Another big thing with Ford is they reinstated their dividend, and they expect that to cost about 1.5 billion to 1.6 billion in 2022, which is a drop in the bucket compared to their projected 6 billion in adjusted free cash flow. So that just goes to show that they still expect to make a lot of extra cash that they can reinvest in the business and grow their EV business too.
But Daniel, why would Ford pay out a dividend instead of taking that money and reinvesting it in future technology?
Yeah, that's a good question. I think that you can look at the difference between a dividend paying stock like Ford is again now or Tesla, and you could argue that paying the dividend hurts your growth because if you want Ford to grow as fast as possible and become a leader in the EV pickup truck market, wouldn't that 1.5 billion to 1.6 billion be better used reinvesting in the business? And I think Ford would argue, well, our clientele, kind of our typical shareholder profile, is traditionally a little bit more of an income investor and a value investor as opposed to a growth investor. So they know that, and they know that that's their core base. And if they want that core base to be on board with this EV transition, which I can guarantee you a lot of people probably aren't, and they're skeptical of it, then adding the dividend in that value proposition helps retain some of those shareholders. But again, I think that counterpoint of maybe not paying a dividend is very interesting. It's something that Berkshire Hathaway, which is Warren Buffett's company, has never paid this dividend. And that's really odd in a way because so many of the stocks that he owns pay dividends, like the Coca-Colas and Crafts of the world. And his argument is that, well, I can grow your value better than 3%, like a 3% dividend yield. And because I can do that, you should keep your money with me and just trust in the growth of the business. So that's kind of the core argument for a dividend paying stock is if you can justify growing faster than your yield, then you should keep the free cash flow. But for a business like Procter & Gamble that has low single-digit organic growth and has this like 2 or 3% dividend yield, well, that makes sense for a dividend stock because they basically probably cannot grow faster than their dividend yield.
So to sum it up, would you say that Ford is a good investment at this time?
Yeah, so I think this year, 2022, is probably one of the most pivotal years Ford has had for decades because they have this demand for their vehicles. And now it's about, can you deliver and are the cars going to be good? One thing we heard from Ford management on the conference call that was really interesting is they kind of talked about the differences in running a traditional ICE business versus an EV business, and how with the EV business, they think that it's going to be so fast moving that the improvements made year over year versus a 2023 model, compared to a 2022 model, is going to be so much more impactful because you have just these improvements in charging and batteries and the chips. The EVs are basically a faster improving space than ICE cars where they just make, a couple, for better, for worse, bells and whistles additions to a lot of their, F-150, for example. So I think that it's an important year for Ford because they do have to establish a good base, and improve their competency in the EV space, because if they don't, you have a lot of companies knocking on their door, like Rivian, which they do own an 11.4% stake of, but at the end of the day, they compete with. You have GM, you have German and Japanese automakers too. So it's a big year for Ford. Can they deliver? Can they make vehicle improvements? Can they get that capacity up to 600,000 vehicles by 2023? That's a really big number to watch, because if they can, they just set themselves up for just mass production of the F-150 Lightning and the Mach-E. So it's a big year for Ford, but at the end of the day, I do think that, especially for someone with a bit more of a risk-averse profile, they are probably the best all-around EV stock to own because they are profitable, they have a relatively low price-to-earnings ratio, they have a nice dividend yield, and it's kind of a little bit more of an easy growth story to understand. Like, okay, if Ford's investing in EVs, that makes sense. Whereas opposed to something like Lucid or Rivian, where it's like, boom, pedal to the metal, like all out, let's go. And that's just way more uncertain. That's high risk, but definitely high reward. So I think Ford is just a great entry-level EV stock that could certainly be a staple in a balanced EV portfolio.